Assalamualaikum and hi. So for today we are gonna present about financial statement for Eon company Berhad for the year 2023 and also 2022. The group members are me, Nuri Batrisha, Ana Zatul, and another two is Alif Afandi and Adam Hari. So let's start.
So I'm the first presenter. I'm going to present the introduction for Eon company. So Eon is a prominent Japanese multinational retail and financial service conglomerate that operates across multiple sectors including retail, finance and services. Aeon has become one of the largest retail companies in Asia. Aeon operates with a diversified business model, primarily focusing on retail, which includes supermarkets, shopping malls, convenience stores, and specialty stores. Their retail outlets are designed to meet various consumer needs, from everyday groceries to high-end products. So for the task 1, historical analysis, the first ratio is current ratio. So for 2022, we got 0.50 times, and 2023 we got 0.51 times. As for the conclusion from the calculation, the current ratio for the year 2022 is lower than the year 2023, which is 0.50 times and 0.51 times respectively. So for the second ratio is quick ratio. 2022 we got 0.17 times and 2023 we got 0.14 times. Conclusion from the calculation, quick ratio for the year 2022 is 0.17 times, which is higher than the year 2023, where quick ratio for the year 2023 is 0.14 times. Next is debt ratio. As for the year 2022, we got 66.70%, and 2023 we got 64.41%. As for the conclusion, from the calculation above, debt ratio for the year 2022 is lower than the year 2023, where for the year 2022, the result is 66.17%, while for the year 2023 is 64.41%. So the next ratio is time interest and earn ratio. For the year 2022, we got 1.84 times, and 2023 we got 1.85 times also. From the calculation above, the time interest earn ratio for the year 2022 is the same as the year 2023, which is 1.84 times. So for the FIP ratio, which is inventory turnover ratio, for 2022 we got 4 times, and 2023 we got 4.30 times. From the conclusion, from the calculation above, the inventory turnover ratio for the year 2022 is 4 times, which is lower than the inventory turnover ratio for the year 2023, which is 4.30 times. For the next ratio is average collection period. As for the year 2022, we got 8.13 days, and 2023 we got 8.55 days. For the conclusion, from the calculation above, for the year 2022, the average collection period is 8.13 days, while for the year 2023, the average collection period is 8.55 days.
Assalamualaikum warahmatullahi wabarakatuh. I'm a second presenter. So this is task 1, which is historical analysis. I continue from Ana Zatul. So this is number 7 ratio, which is total asset turnover. In 2022, we got 0.76 times, and compared to 2023, we got 0.79 times. In conclusion, from the calculate above, the total asset turnover for the year 2022 is 0.76 times, while for the year 2023 is 0.79 times, which is higher than the year 2022. Next, operating profit margin, which is 2022, we got 7.8%, and 2023 we got 7.01%. In conclusion, from the calculate above, the operating the operating profit margin for the year 2022 is 7.8%, while for the year 2023 is 7.01%, which is lower than the year 2022. So next is net profit margin, which is 2022 we got 2.69%, and 2023 we got 2.78%. In conclusion, from the calculation, we can conclude that the net profit margin for the year 2022 is 2.69%, while for the year 2023 is 2.78%, which is higher than the year 2022. This is the second last ratio, which is return on asset. In short, we use ROA. In 2022, we got 2.05%, and 2023, we got 2.2%. In conclusion, from the calculation above, we can conclude that return on asset ROA for the year 2022 is 2.05%, while for the year 2023 is 2.2%, which is higher than the year 2022. This is the last ratio in task 1 historical analysis, which is return on equity. In shortly is we call ROE. In 2022 we got 6.16%, and 2023 we got 6.18%. In conclusion, from the calculation above, the conclusion that we can conclude is the return on equity ROE for the year 2022 is 6.16%, while for the year 2023 is 6.18%, which is higher than the year 2022.
My name is Nuri Matrisha, and I am the third presenter for this presentation. Next, we will move on to task 2, which is competitive analysis. The current ratio for Ion companies Berhad is we got 0.51 times, and compared to the industry average, which is 1.58 times. So the conclusion that we got from the calculation is that the current ratio for Ion Co Berhad is 0.51 times, which is lower than the industry average, where industry average current ratio is 1.58 times. Having a ratio of 0.51 times means for every 1 ringgit of current liabilities, the company only has 0.51% of current asset as a backup, as compared with the industry average of 1.58 times. Next, we will move on to the next slide for competitive analysis for quick ratio. The Ion company Berhad, the quick ratio that we got is 0.14 times compared to the industry average, which is 1.0 times. So the conclusion is, from the calculation, we conclude that the quick ratio for Ion Co Berhad is 0.14 times, which is lower than the industry average, where industry average quick ratio is 1.0 times. We can conclude that quick ratio for Ion Co Berhad less liquid than industry average as a whole. This company is very risky for the firm itself, as they have difficulty of paying its current liabilities when the need arise. The next one, we move on to inventory turnover ratio. We got 4.30 times compared to the industry average 7.1 times. So the conclusion for this inventory turnover ratio, the inventory turnover ratio for Ion Co Berhad is 4.30 times. However, the industry average is 7.1 times, which is higher than the Ion Co Berhad. It indicates that this company is less efficient, has poor sales, has excess inventory, and therefore takes longer time to convert its inventory into sales. One is debt ratio. The debt ratio that we got for Ion Co Berhad is 64.41%, compared to the industry average is 75.3%. So from the calculation, the debt ratio for Ion Co Berhad and industry average is 64.41% and 75.3% respectively. This conclude that the debt ratio for Ion Co Berhad is lower than industry average. With this low debt ratio that this company has shown, it will reduce the potential losses that may occur in the event of liquidation. This company also will not experience difficulty in raising additional borrowings when the debt ratio is lower than industry average.
Assalamualaikum and hi, my name is Alif Afandi bin Aziz Rahim. So I'm the fourth presenter. Now I'm going to present the task 2 competitive analysis for net profit margin. Net profit margin we got 2.78%, industry average we got 6.16%. From the calculation, net profit margin for Aeon Berhad is 2.78%, which is lower than industry average where the net profit margin is 6.16%. The low net profit margin is basically due to higher operating expenses. This company has to pay higher interest charge, and that's why the result is low. So next is return on equity, ROE. We got 6.18%. Industry average we got 5.25%. From the calculation, the return on equity, ROE for Aeon Berhad is 6.18%. While industry average is 5.25%, ROE for Aeon Berhad is higher than industry average. So, if the ROE of this company is higher than industry average, the return for the shareholders is better and higher. ROE also will lead to high growth firm. So now I'm going to talk about task 3, recommendation. From the data, it shows Aeon inventory turnover ratio is higher than industry average in 2023. Reflects its operational efficiency and strong market demand. Its optimized supply chain, cost-effective flat pack model, and data inventory management ensure quick stock movement and minimal holding costs. Next is by overcome low liquidity ratio. Aeon can improve their liquidity ratio by promoting cash sales, improving account receivable collection, and negotiating extended payment terms with suppliers. Next, by prioritizing high margin product, reducing expenses that are not important, and increasing cash reserve can enhance liquidity. Aeon also should manage their current liabilities well by reducing it. Furthermore, Aeon can increase its net profit margin by focusing on cost optimization and increasing revenue. Managing operation well and the supply chains can reduce production and logistic costs, while increasing sales of high can make margin product increase profitability. Expanding into emerging market and using e-commerce can increase revenue. Aeon can also reduce operating expenses by adopting sustainable and use energy efficiently. So, lastly, Aeon can increase its time interest ratio by improving operating income through cost optimization, make higher sales of high margin product, and revenue expansion in new market. Other than that, a higher time interest earn ratio signals better financial and debt management, which makes shareholders trust the company's stability and ability to meet obligations. This can lead to increased investor confidence, potentially boosting stock value and shareholders' return.
In conclusion, Aeon Berhad performance from the year 2022 to 2023 has shown strength and further opportunities for growth. The high inventory turnover ratio reflects operational efficiency, meaning that very strong market demand for its product is will matched by efficient supply chain management. With a few challenges persist, especially regarding liquidity and profitability, Aeon company still continue to improve and rise to success in such dynamic retail marketplace by using all of their strategic efforts. So that's all from us. Thank you.